Very good afternoon. Let's get to your markets now. Asian markets closed in positive territory. This after a U.S. federal trade court ruled that President Donald Trump had exceeded his authority in instituting reciprocal tariffs, dealing a blow to the president's economic agenda. And in terms of company stocks, Nvidia's stronger than expected results are likely to have helped support sentiment in the tech sector at least. The Nikkei share average rose by 1.88%. The Hang Seng Index gained 1.35%, while the Shanghai Composite Index ended 0.7% in the black. Over in the United States, stock markets fell in yesterday's trade following reports that Donald Trump's administration had asked American firms to suspend certain semiconductor software sales to China, prompting investors to worry about trade tensions yet again. Meanwhile, Nvidia shares jumped by 5% on the company reporting first quarter earnings and revenue that surpassed forecasts, driven by an over 70% year-on-year increase in its data center division. The Dow Jones Industrial Average declined by 0.6%. The S&P 500 lost 0.56%, while the Nasdaq Composite Index also closed 0.51% in the red. Looking at local indicators, we see that the all-share index is currently up 0.8% at 94,678 index points. The rand is trading at 17.86 against the US dollar, 20.13 vis-a-vis the euro, and 24.03 against the British pound. In terms of our commodities, we see that gold is trading at $3,296 an ounce, platinum at $1,082 an ounce, while Brent crude oil is trading at $64.37 a barrel. All right, let's get into conversation with Mohammed Wagli. He's a portfolio manager at Sasfin Wealth. Thank you very much, Mohammed, for joining us. So, a U.S. trade court in Manhattan is reported to have issued an unanimous ruling yesterday saying that Trump's reciprocal tariffs are actually illegal, giving the administration 10 days or so to effect its order, but seemingly with no extra details. Of course, this is a blow to Donald Trump, but it could cause even more uncertainty for market players, given that we don't know what he's likely to do next.
Absolutely. First of all, always a pleasure to be on, Nompu. Thank you so much for having me. But yes, this I would say is easily the big story of the day. But just before I get on to sort of how material this is for markets, just to provide a bit of context here, because I think that is quite important. In order to implement these tariffs, Mr. Trump had been using the International Emergency Economic Powers Act. Now, that's a federal law that gives the sitting president authority to regulate international commerce after declaring a national emergency in response to some sort of unusual or extraordinary threat to the US. Now, that's really what he's been using in order to be able to push through these sort of tariffs. And interestingly enough, he had made use of this in his first term as well. Now, the news coming out of Manhattan yesterday was that the trade court had ruled that these reciprocal tariffs, which are obviously, part of his broader trade war strategy, were illegal. Essentially what they're saying, it is beyond the scope of that act. And, the president actually still needs Congress's approval to slap on these sort of massive tariffs. Now, it's not the end of it. I don't think anyone will be surprised to hear me say that. The Trump administration has 10 days to respond. They've already indicated that they plan to appeal. But, you touched on this earlier. It adds a sort of layer of uncertainty to trade policy going forward. But, the market's taken this news relatively well. We're not super keen on the trade, on the tariffs and the trade tensions. And basically, we're hoping that, if the tariffs are rolled back, it could ease trade tensions, lower costs on imported goods, and, we would see sort of material movement in, the shares pretty much across the board. And, that's what we're seeing today. Futures are looking quite nice on the S&P 500 and the Nasdaq. They're both up quite nicely. I suppose it's turned a little bit, but gold prices had even dropped slightly. But what we're seeing is that there is a bit of positive sentiment, but by no means is this over. This is very much a developing story. The Trump administration will respond. So let's see sort of how that plays out. But yeah, again, by no means is this done. We're going to see a lot of movement here, and this is very, very material to market. So, we should definitely keep an eye on this. I think we're going to be watching very closely.
Yeah, really appreciate that context. Thank you so much for that. So if I'm reading it right, it looks like the local currency is firming against major currencies. What's your reading of that ahead of the MPC's decision on rates? It seems that a number of financial houses are expecting a slight cut, 25 basis points. But what's your impression?
So look, I'd say we've been sitting quite strong all the way since the start of last week, maybe even a little bit before then. You guys, you will remember that President Ramaphosa met President Trump. I think it was last week Wednesday, and leading up to that, we started seeing sort of the rand firming. I think the name of the game at that point was sort of concessions, and we watched the meeting. I think it was. Bizarre is the word I would use, but not as bad as it could have been, and we've been relatively strong subsequent to that. So that's a bit of ammunition for the SARB to perhaps cut rates. I think in an ideal world, they'd be hoping that that's a bit closer to 17 Rand 50, but again, still a bit of ammunition. I think really what's giving people optimism is where inflation is. As of April, we're at 2.8%, which is below the bottom end of that target range of between 3 to 6%. That being said, I would say I'm probably not as optimistic as everyone else that we will get that 25 basis point cut a little bit later. I think it's very much touch and go. And there's a couple of reasons. I think first and foremost, the Fed hasn't cut rates, and it's not as if that we're just going to sort of blindly follow what the Fed does, but they haven't cut rates due to concerns in relation to things like the trade tensions, and that's going to be something that will be at the forefront of the Reserve Bank's thinking as well. So we will see. There is a bit of optimism, and truth be told, there is reason to cut rates as well. In terms of the impact that would have, needless to say, consumers would love it. Loans and credit is going to get a bit cheaper. There could be then a bit more incentive to spend a bit, and that could give the economy a little bit of a lift. Obviously, we need that. I don't think it'd be great for everyone across the board. The banks and the insurers may not like it as much, thinking about that interest income line item on the balance sheet. But other than that, it would be really great for the economy. I just don't think it's sort of as nailed on as maybe some have been pricing in. Generally speaking, the Reserve Bank has been quite prudent. So I think this one is a bit of touch and go, but needless to say, if you ask me what my preference would be, I'd absolutely take the rate cut, but there is a chance we may not get one a little bit later today. Not long from now, hey, I think just an hour and a half.
Exactly. So Retail Group, Lewis, they released their annual results for the period ended March 2025. Very quickly, because I've got the director in my ear, just give us your overall view of how that stock is doing.
In a nutshell, I'd say the financials were quite excellent, truth be told. We're seeing growth pretty much across the board. All the geographies are doing well, and both the major segments are growing and growing quite substantially. We're looking at close to 10% and mid-teens growth in some instances. So yeah, really nice to see some good growth there. They've also mentioned expanding, as many as 40 new stores. So very encouraging from Lewis, but I've got to say they've been running for the past year. I think the share's done about 84%, so very good performance from a company that has had a relatively good year. In fact, I would say a very good year.
So one word answer: buy, hold, or sell?
I'd be looking to trim. That's more words than I was given, but yes, I'd be looking to trim.
Thank you so much, Mohammed. That was Mohammed Wagley. He's a portfolio manager at Sasfin Wealth.